All right, Bulls and Bears, back with another dose of economic reality. As usual, we have a lot of very, very important financial economic news to get into today. We've got the FDIC it looks like to me they're preparing for bank failures. I'll see what you think about it here. And we'll talk about that in just a few minutes here. Before we get into it, though, let's go ahead and talk about this. Jobless claims exceeds estimates. The Philly Federal Reserve Index declines. Housing starts and permits fall sharply. That's just some of the notes I have here that we're going to go over today in this report. But let's jump right over to this here. I think most of you might have tuned in for this bit of data out of American Banker. FDIC board approves stricter resolution plans, faster merger reviews. And folks, this is about banks that fail. Right? What do we see a lot of times when a bank fails? We see it merge with another bank or get bought out by a larger bank typically. So what they want to have happen now is have this to occur. They want the merger and the buyouts to happen much more rapidly. So why would they be talking about this? Well, probably because there's over $500 billion in unrealized losses with commercial real estate amongst a lot of banks, especially the regional banks, right? So this is a sign that there's big, big problems ahead, and we've already seen banks fail, right? So we don't have to speculate here. We know that there's big problems in the banking sector. So what they're going to try to do anyway, they're going to try to gloss over it by just allowing these bigger banks to buy up the smaller banks, right? Mergers, the too big to fails come in, and they get even bigger and bigger and bigger until ultimately, who knows how far down the road, you just have a few mega banks, right? And they control everything. And you see this consolidation and you see this movement of money to the top, right? The rich keep getting richer. The bigger companies keep getting bigger, buying up the smaller companies. The rich gaining wealth faster than most other people. In fact, if you look at 70% and below percent of the population, you see people not only gaining wealth more slowly, you see people going further and further into debt. The middle class is basically being eliminated here very slowly, right? It's the frog in the pot scenario. You're not going to really notice it too much, but it's happening very slowly and gradually. And you can bet it's happening. I mean, look at the wealth consolidation right now, how much the top 1% own versus everybody else. It's really off the charts and ridiculous, but it's just continuing to get worse. And nobody really, for what I hear, nobody really talks about that, right? That's why we try to cover these topics here in this channel. We try to cover things that not too many other people are talking about, or maybe they are, and I just haven't seen them, right? But let's move on to some other stories here because let's get into this next. We have Japan out there dumping $63 billion worth of U.S. bonds, and we see so many countries now de-dollarizing, dumping bonds onto the market, dumping dollar-denominated assets, and selling off debt. So normally we would see yields spike, and that would mean even higher interest rates. But we're seeing something very strange happen. Even though all these countries are dumping the U.S. dollar, dumping dollar-denominated debt, we're still seeing the 10-year yield, the bond yield, very low. We've got it today at 4.25%. 4.25%. Remember, we saw it spike up over 5%, and a mystery buyer of massive amounts of debt came in. I think we all know who that is. Right? Anytime you can create trillions of dollars, you can prop up markets, you can keep interest rates suppressed. Mortgage rates would be much, much higher right now if this was a free market, right? But when you have money that's not backed by anything ever since the early 70s, this allows this type of thing to happen where you can just create all this money in the background and you can create boom and bust cycles. You can keep bubbles propped up way longer than people expect or way longer than people believe. People can't believe housing right now. People can't believe that home prices aren't crashing, and they don't know what's happening. They don't understand it. But we break it down here for you on this channel very frequently. If you look at all the other factors and all the inflationary aspects of this, the high mortgage rates is just a small part of what's happening in the housing market right now. You have so many other things that are inflationary, and that's why you haven't seen the housing bubble go bust, right? Prices are starting to come down in some cities, but the cities that are coming down are just cities that went up just extraordinarily in the past few years, mostly in Texas in Florida, and those aren't even that big price drops or price corrections, right? So continue to brace for more inflation coming. I wish I had better news for you on that, but that's what I see. Unless we see something massive come in and cause a big scare. Let's talk about this: 62 new corporate bankruptcies in the month of May, and right now we're still on pace with what we saw in 2023. And I think the second half of the year, though, we're going to eclipse what we saw in 2023. At this time last year, at the end of May, we had 277. This year, we have 275. So we're right about where we were last year. And last year was one of the worst years in many years for corporate bankruptcy filings. But again, I've always said here for the past year or so, I've been saying that the second half of this year, we're going to see some lightning strike. We're going to see a storm that I don't think anyone here expects the kind of storm that we're going to see in the second half of this year. I think it's going to be closer to October. For those of you that want to get more insight on my timeline on that, I did a report just 1 or 2 reports ago where I said something like October warning or something like that. I broke it all down in that video for you. But yeah, right now we're on pace this year, just about where we were last year, just 2 away from what it was last year. We ended up with a total of 637 corporate bankruptcies throughout 2023 calendar year. We're at 275 this year, not yet halfway through the year. So we'll have to see what happens and keep an eye on that and see how all this ends up here. But I think we're going to be right about that. All right, now let's go ahead and transition to how we can benefit from this. How can we know what's going on and use it to our advantage? Well, one of the things is trading, and I let you guys in on a trade that I did just recently. Yesterday, was it yesterday? The day before, we talked about shorting Nvidia, and we're looking pretty good so far. We shorted just under 140, and I did this via a put option, and we had a big drop today. We're down to just under 131, so that was a nice gainer already. And what are we seeing here? Over 3.5% down today. So things are headed in the right direction. I think it's going to be another winner. That'll be 10 in a row as far as stocks that we talked about here and as far as trades. And just remember, put options, you don't have to close it out. You could be at a loss, but you can just keep the put option because if it doesn't expire until, in this case, I've got it till November, and you've got plenty of time for the stock to correct. And the reason I shorted it is because look at this. This is parabolic, right? So we're off to a good start for those of you that followed me. And I don't encourage anyone to follow blindly, right? Do your own due diligence, do your own research. I just put these out there for entertainment purposes and just a little bit of strategy, right? Because it's kind of a bummer just to hear about the news day in and day out without capitalizing on it, right? But when you see manias like Nvidia stock, there's opportunity there. There's opportunities in the other boom and bust sections of the economy, not just individual stocks. There used to be there used to be very big boom and bust opportunities in real estate, but now it's just boom, 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 boom. The powers that be, they're not letting the housing bubble come down. So you could put in shorts on the housing market. You could short the home builders, and you could do things like that. But right now, the inflationary forces are still too much, in my opinion. I wouldn't actually go short on the housing market or housing stocks. For the housing market to crash, something big has to change with the banking system, right? So it's going to be very unusual if something like that happens because we know the powers that be, they do not want deflation. They would rather have inflation versus deflation because in deflation, a lot of big things come along with deflation. A lot of massive job losses, way worse than we're seeing now. Inflation and just pumping more money into the economy actually makes things look like they're doing good. It gives the illusion of growth, right? If people can go out and go further and further and further into debt and spend money, mostly borrowed money, that's the illusion of growth. But at some point, there has to be a breaking point, and at this pace, it's going to be the consumer. Right? Remember, they can throw trillions of dollars at the banks. The banks can keep operating no matter what, no matter how many loans go bad. They can just throw trillions of dollars at these banks. Consumers not so lucky. So what are they doing? They're coming out with programs to help consumers, debt forgiveness, all right, other things, helping people pay their bills, all these assistance programs. I'm sure many of you know exactly what I'm talking about. zero down payment mortgages, mortgage modifications. All kinds of things are happening right now to keep the bubble inflated. All right, let's transition though. I've got a couple other things I wanted to touch on here. Let's jump over to celebrity land here for a minute. And this is financial related here. We've got Justin Timberlake out there busted for DUI. He took a $2 million loss. I shouldn't say loss. He reduced the price of his home by $2 million. It's a 127-acre property. And let me show you his investment, though. It's interesting that when you see celebrities get DUIs, can't they afford a chauffeur or an Uber? Why would they need to drive, especially if they're drinking? His property sold for $8 million in May after dropping the price down from $10 million. Now, at first, it may seem like that was a big loss, like, boo-hoo, he lost $2 million. No, he really didn't. If you look at when he bought this property, he purchased it for $4 million. And this is outside of Nashville in 2015. So not bad. From $4 million, even though he dropped it a little bit, still sold for $8 million. Why am I even talking about this? Well, I think it just goes to show you that no matter how rich you are, how famous you are, we're all human. And sometimes more money, more problems. This guy has had relationship problems and things like that. So I think it's pretty interesting, though, when you see these types of stories. It makes you wonder. But here's the real financial aspect of this. The reason why he could be drinking, I think he's trying to cover up some pain because he had to cancel a tour. The singer mentioned his tour during a traffic stop, saying this is going to ruin the tour. But before all this even came out, there were very slow ticket sales for the tour. It was reported that the Forget Tomorrow World Tour hasn't grossed enough to cover the losses that would happen if he's not able to finish the tour dates. So in other words, if he gets put in jail and has to miss the dates, the tour could be a loss because ticket sales haven't been good enough to make up for that. And I think people are just tapped out. Who has $100 and something? I didn't see exactly what the ticket prices were because I wouldn't want to go to that concert. But the consumers are balking at these high ticket prices. All right. Also, there's another part to the story I wanted to get into here. Public records show that he was saddled with an $8.8 million home equity line of credit through Citibank that he took out in 2009. So you buy a home for $4 million, you take out an $8.8 million home equity line of credit because he ended up making, getting equity in the home. Right. So that's another example of how a lot of people, they may seem rich, they may look rich, even well-known entertainers, but yet they end up taking out a lot of debt, right? Because a lot of these people, they can't manage their money very well. They have to give up a lot of their money to managers and bookkeepers and people that do things for them. A lot of these people don't even write their own songs. They end up giving a big cut of their songwriting royalties to co-writers and record labels, right? So it's pretty interesting. I've always found that fascinating about, especially people in the music industry, how so many musicians are broke. I was watching a documentary on an 80s, some 80s hair metal band, and all of them are working day jobs now. And this was like a big band that used to be on MTV and stuff like that. I won't get into that too much, but point is, we're all human, and even people that look rich and they look successful and happy, a lot of times their life's a mess behind the scenes, right? So don't be jealous, and don't be a hater. Don't hate people out there because they look like they have a lot of money. And a lot of people just showboat, right? I personally know a lot of people that really aren't doing financially too well. But if you looked at them, you would think they were. They've got the nicest, newest cars, fancy clothes, right? All that good stuff. And I think a lot of celebrities are putting on a front because a lot of them aren't very savvy investors. And a lot of them end up getting ripped off by their own people in their own circles. You know what I mean? All right, people. So what do you think about the FDIC preparing for what I think is more bank failures? They're making it more liquid as far as the rapidness of bank mergers. The FDIC Insurance Corp Board Thursday voted along party lines to ramp up disclosures larger banks must submit as part of their living wills. Right, that's something else too. These banks have living wills in case of a massive wipeout. So it's pretty interesting, folks. What do you think about all this? Let me know down in comments. And hope you guys like this video. Thanks everybody for being here. Keep stacking, and we'll see you next time. Big love. Peace out.